Hey traders, Chris Vermeulen from thetechnicaltraders.com. Want to recap on a trade that we closed out today. The symbol was HAIL, HAIL, which is an EV, electrical vehicle market. Obviously, we had a market buy signal back in early November, which is this green bar along the bottom when the market's favorable. We end up getting into HAIL for a new position right here on this green momentum buy signal. We had a very nice run hitting all of our targets, and more or less we closed our trade out this morning at the opening bell because the stock market has turned unfavorable. If you see the red bars along the bottom, when we get the stock market giving us a sell signal, we close out all positions. And let me recap a little bit more on this play here. So we got into HAIL we had the signal on this day on December 7th. We get in the next day at the opening bell, and we were looking for three targets to the upside. We were looking for a 7% move, which we ended up reaching within about 2.5 weeks. And then eventually we were looking for our next target, which was a 15% move, which we ended up getting out another couple weeks later. And then after that, we were looking for a 20% move, which we ended up hitting only a couple days later for scaling out of three portions of the position. Now, we like to scale out at 7, 15, and 20, and then we leave the rest as a runner. You never know how high a sector or stock or asset is going to continue to run. And if it runs 50 or 100 or 200%, like we've seen a lot of these sectors do over the last year, you want to make sure you still have a piece in that game in order to capitalize from there. Now, overall, the stock market gave us a sell signal on Friday at the closing bell. So we were to exit today at the opening, which we did. And we talked about this in great detail in our live mentoring session on Friday with members, how we are going to, we wait to open the next day on Monday to exit the position because it's just the way we work. We get signals at the end of the day, so EOD, and we take action the next day at the trading bell, at opening bell. So if we were to look at the price action, here is let me just zoom in. This is the 10-minute chart of HAIL. It's a little scattered. It's a fairly light volume traded ETF, but if you take a look at the closing price, which is right here on Friday, we wait till the opening the next day. And a lot of times, not only does HAIL tend to open higher, but when you're in a leading sector, they tend to want to open higher naturally. Now, especially because the stock market closed on Friday at a key support level, the 20-day moving, the 50-day moving average. Also, it closed in an oversold market condition, meaning it was most likely to have a bounce or a gap up today. And that gives us a better fill. So we are actually able to exit at the opening bell for an extra 1% gain on that trade. And you can see here it had a little bit of a pop and spike, and it's starting to work itself lower. Now, if we were to take a look at the broad market, let's go to the SP 500. We'll keep it down to the SPY, keep it simple here. You can see on this green chart on the left, these lime green areas, this is when the market gets oversold. And so the market got oversold on Friday, ended up closing in this lime green territory. This trading session, it's already opening, it's coming out of that. But you can see on the daily chart here how price closed at this 50-day moving average. Now, if we were to throw a Fibonacci extension on there as well, you can see from the high to the low to this rebound high, Friday or last week's move, really, we saw a big sell-off. It had a knee-jerk reaction bounce, and then it had 100%. This green line here, 1 stands for 100%, a perfect measured move. So there was a lot of things coming into play on Friday telling us that Monday was going to gap higher. The odds were it was going to gap higher. We're going to be able to get out of our trade at a better profit and let the market go from there. Now, as we know, the market gaps tend to get filled. So the market gapped higher today. I wouldn't be surprised if we see it sell back down. And overall, if we were to look at the overall market, we're getting into a condition here where we could start to see this market chatter and trade sideways or lower for a couple of weeks, maybe even longer. The same setup that's happening right now is very similar to what happened back in September. It's also the same pattern that we saw back here on the SP 500 in June, and also the same scenario that we saw back in February. You never know how big a market correction is, and that's why you don't hold when the trend turns negative. Now, 50%, if we go back to our band list here, over 50% of our sectors here are now in risk off mode. We've got lots starting mixed signals now and giving downtrends in our long-term stage analysis here. We're starting to see longer term trends actually turn into distribution. So that's the early stages before they go bearish. So there's a lot of weakness creeping in here, and that's why we closed out all of our band positions and we're waiting for a new market buy signal, which will be something like this across the bottom of the chart when it goes from red, which is where we are right now, back to green, and then we're looking to get in the best assets to move back up. So that's the recap on the trade. It was a pretty good trade overall. We let's see where we got out of this one. We got that final position came out at a 19%. So we took profits at 7, 15, 20, and more or less 19 and a half again. So really great trade, and really it was a type of trade where we never really suffered any pain. We got into it. It only went underwater here just for a couple of days as it was still consolidating, and then it really broke out and started to run. While the stock market struggled, we ended up having a pretty good trade there. Anyways, hopefully that gives you an idea of the type of trade setups we're looking for. We are going into a new market here where we could have a sell signal. It could last a couple weeks, it could last only a couple days, or it could be something more significant where if we go to the, let me go to the SPY here, we could see something a little more dramatic like the February 2020 correction where we saw the market go dormant here. If we just zoom in, it went dormant for 2 months, out of favor for 2 months. So we just need to wait and see when these next trades are going to set up, and just continue to get into these market cycles as they happen and get into the market leaders. And that's exactly what we'll be doing, one day at a time. Take care. Bye-bye.